From Daily Forex, this is Chris taking a look at the US dollar against the Canadian dollar. It's been a very wild day in this pair, mainly due to the fact that Donald Trump has decided to put a pause on reciprocal tariffs against every country except China. Now, there is still the 10% tariff, but that walks everything back quite a bit. The pause is scheduled to last 90 days, and it'll be interesting to see how this plays out here. But it is worth noting that we fell hard enough to test the crucial 200-day EMA. The 200-day EMA does seem to be offering a bit of support so far. And I think while you do see the US dollar getting some of the gains going against currencies such as the British pound, this is a bit of a reprieve for Canada itself, and I think that does make a certain amount of sense that you would see the Canadian dollar pick up some strength. The question at this point in time, it's more likely than not going to see some support not only at the 200-day EMA, but possibly the 1.40 level. A breakdown below the 1.39 level opens up the trap door. At that point, the market probably enters some type of free fall. If the US dollar were to turn around and break back above the 1.42 level, then it's likely that we could see a move toward the 50-day EMA and then the 1.45 level. I think over the longer term, it's a bit up in the air. It'll just come down to what the market decides to focus on. But as far as economic performance is concerned, I think you have a situation where the US still outshines Canada. So I still think a bounce is very likely. But in the short term, it does make sense that some of the selling pressure against the Canadian dollar has abated.